is the difference between conventional bank and Islamic bank. Okay, you can see that the first point of difference is principle, principle. So you can see that the principles of Islamic bank is based on Sharia, Islamic Sharia, and the principles of conventional bank is not based on such Sharia or any other principle. Rather, it has evolved over time in response to different economic activities of the human civilization. So this is the first difference. Second one, what are prohibited actually? In case of Islamic bank, we know that there are very strictly mentioned prohibitions. Number one, riba, that is the interest. Gharar, what is gharar? Can anybody tell me?
Uncertainty.
Uncertainty. And maisir?
Gambling.
Okay. So we can see that in case of Islamic bank, there are certain, at least 3 prohibited elements that that cannot be in the Islamic banking contracts. But in case of conventional bank, we don't have such type of prohibitions. Now, if you think about risk sharing, actually, in Islamic bank promotes risk sharing between the provider of capital, that means the investor, and the recipient of the capital, entrepreneur, because you will see that in many contracts, actually, the risk is shared between these two parties, investor and the entrepreneur. But in case of conventional bank, we do not have that much risk sharing. Maybe there are some degree of risk sharing, of course, but not that much as it is found in case of Islamic banking contracts. So investors is certain to receive a predetermined rate of interest. This is in most cases this will happen. Sometimes there are some flexible interest rate or floating rate agreements or something like that. Okay, so these are only a small portion of the conventional banking contracts. Mostly these are based on fixed or predetermined rate of interest. So risk sharing is limited. The scope of risk sharing is limited in case of conventional bank. Now, if you think about the Sharia compliant products, actually Islamic bank can provide products that are Sharia compliant and halal, that is permissible in Islamic Sharia. But in case of conventional bank, some banking products and services may be compliant, or some of them may not be compliant. Okay. Sometimes the banks also provide an option that you will not take any interest in your deposit, so that they try to get the customer who are very much serious about the Islamic Sharia. But still, the degree at which you will get the Sharia compliant products in Islamic bank, that will not be possible in case of conventional bank, because ultimately those will be mixed up. Number 5, asset-backed financing. As we have said before, that asset is very important in case of Islamic banking contract. So Islamic bank actually make a very clear differentiation or distinction between asset and money. Okay, so Islamic banks do not recognize money as a subject matter of trade. Islamic bank follows that we cannot trade money, because money is not a commodity, money is not an asset. Okay, so this is recognized in Islamic banking system. But in conventional banking system, what happens? Bank and financial institutions deal in money and monetary papers, as if those are like tradable commodities or tradable assets. They consider the assets they consider the money as assets in many of their transactions. Okay, so these are the 5 differences. We will talk about 5 more differences. So now we have got the next difference, moral dimension. Okay, moral dimension. So in case of Islamic bank works within the moral values of Islam, definitely, because the emergence of the Islamic banking system is basically based on the Islamic principle. So they will have to work within the moral values of Islam. Otherwise, why people would go to the Islamic banks if it does not offer anything new? Whatever new Islamic banks are offering is basically the moral values of Islam, the banking transactions based on the moral values of Islam. And Islamic bank cannot or should not finance any projects that conflict with Islam and promotes transparency. So it definitely, Islamic banks promote transparency. So whenever they finance, they make sure that it is financing a project that does not have any conflict with Islamic principle. But in case of conventional bank, it is not that much strict. They might not be concerned about we should not say they are not concerned, because some of the conventional banks definitely might be concerned about a moral dimension. But they do not have that much strict requirement, So in case of conventional bank, they might not be concerned about the moral implications of the activities financed and may not be transparent. Now, I would add may with this sentence actually. Okay. So this is the moral dimension. And number 7 is the zakat. Conventional bank usually do not deal with zakat, but in case of Islamic banks have to pay zakat. Okay. Number 8, penalty on default. Remember, in case of conventional bank, if a loan customer, they default their payment, the conventional bank can charge additional interest, and they will actually. In many cases, they will. Forget about the exceptions. Okay, and in case of Islamic bank, in case of default payment, there will be no extra charge, no additional, there will be no interest on interest, something like that. That will not be there. So this is a very key difference between the conventional bank and Islamic bank. Number 9, customer relationship. So in case of conventional bank, the relationship is basically like creditor versus debtor. So relationship between a bank and its customer is like a creditor and debtor. But in case of Islamic bank, it is a little bit different. Status of a bank is in relation to its customer as a partner, investor, or entrepreneur. So you can understand, if you think about the Mudaraba, Musharaka contract, you will see that between the Islamic bank and the customer, one party is investor and another party is the manager or something like that, or both parties are the partners. Both parties hold the equity or something like that, or investor. This kind of relationship. This is not really debtor versus creditor relationship. So this is a key difference between conventional bank and Islamic bank. Now, another difference, last but not least, is Sharia Supervisory Board. Because the Islamic banks are basically emerging based on the Islamic principle, so it is very important to make sure that they follow the principle. They do not violate the Islamic principle. They do not violate the Sharia. So this is why each Islamic bank must have a Sharia Supervisory Board to ensure all business activities are in line with Sharia. That is very, very important. Islamic bank cannot, you cannot have an Islamic bank without the Sharia Supervisory Board. Okay, so this is a very important characteristic of Islamic bank, which the conventional bank does not have. In case of conventional bank, it is not applicable at all, because they are not based on any Sharia principle or any of this kind. Okay, so this is a very key difference, that conventional banks do not have any Sharia Supervisory Board because it is not applicable for them, but Islamic banks have the Sharia Supervisory Board because definitely it is the very critical aspect of Islamic banks. So these are the difference between the conventional bank and Islamic bank.